So, let's talk about railroads. I like this PowerPoint because it breaks it down into many different areas here. All right, the business of railroads, again, it's the first big business in America, and it has a huge, huge impact on American life. It creates that nationwide market for goods, all right, and encourages that mass production and mass consumption of goods. And see, like, what happens is eventually that mass consumption is going to go away, and we still have mass production, and then that's when we have inflation. All right, it's going to promote the growth of new industries such as coal and steel. Also, we're going to get time zones created by the railroad, because eventually, it's different times. It might be 6 o'clock in the East Coast, but it's not 6 o'clock in the West Coast. All right, so their time zones will be created. All right. It is going to probably be the first modern business structure in the way it's organized. Instead of just having a sole proprietorship or a partnership, the first real corporations are going to come about because of the railroad business. You're going to have stockholders. People are going to invest their own money. Then again, the more investors you have, the less liability there is for the heads of the businesses. All right, financial structures we talked about with pools and trusts, and then just the way that the businesses are going to be managed. With the railroad, we're going to find increased government regulations. Everybody wants to talk about socialism and the government impact and controlling business. Well, just because there's laissez-faire economics, again, does not mean that the government won't try to help businesses, one way or another. All right, so government regulations help. Western Railroad, first of all, promoted settlement. Again, it linked the West with the East. You're going to find an abundance of government loans and land grants. In fact, over 170 million acres of land are going to be given away to the railroads. Some of that's going to be taken from people in the West. Some of it's just going to be taken from the natives, and some of it's just open territory. All right. Now, what are the problems of this? First of all, with the railroad, because they were trying to do it so fast, there's a lot of shoddy construction. The way they built it, not all the rail gauges are the same, and not all the the splits between the rails are the same, and so the construction's not always good. All right. Also, there's a lot of corruption when it comes to these railroad tycoons. All right. Just kind of recapturing this point here. The Transcontinental Railroad. Okay, you have the Union Pacific west from Omaha, Nebraska, and that's going to be built by veterans of the Union as well as the Irish. And then you have Central Pacific that goes east from Sacramento, and that's going to be mainly built by the Chinese. May 10th, 1869 is when they meet in Utah, Promontory Point, Utah. Right, that's where the first Transcontinental Railroad is going to be connected. Right. And it's a little misnomer here because it's technically not transcontinental, even though there are railroads that connect to the site here in Nebraska, but this is one straight line. Leland Stanford, Stanford University is named after him. He invested in it. He's going to be one of the lead railroad tycoons to help build this Transcontinental Railroad. All right, here's a very famous photo of the two trains meeting. Here you just see construction and how they blasted the way. And we'll watch a video that kind of looked at this and how it was created out west. But what's kind of nice is you see all the different ethnic groups involved in the building of the railroad. All right, so here you see the pattern of land grants you see along the railroads here, and how they're going to try to break away the right-of-way 100 miles wide, so nobody could own that territory. And then you see the different time zones that are going to be created to help with the railroad. Okay. All right. Now, competition and consolidation. First of all, railroads are going to be overbuilt, and early on they're going to be very unprofitable. All right. There's going to be a lot of mismanagement and fraud between the railroads and the government, and how much it really costs for constructions, how much they actually pay the workers, things like that. All right. So the stocks in the railroad are going to be watered down. I mean, it's going to be inflated value. All right, Jay Gould, who's one of the people we've been talking about today, he's the lead fraud entrepreneur, businessman, whatever you want to call him. He's a robber baron. All right, he's very corrupt and immoral and illegal. Okay. The other thing we talked about a little bit the other day is how they offer discounts and kickbacks to the favored shippers, and then that comes at a price to the middle class or the small business or small farmers. Okay. And again, they form pools, which secretly fix rates and things like that, which is illegal. One of the things that is done, as we talked about, the Interstate Commerce Act is going to be passed with the ICC created to help monitor it. But the effects of this are not really seen. It's kind of like a smoke and mirrors type thing. Eventually, the Panic of 1893 is going to force about a quarter of all the railroads to go bankrupt because, again, the stock market's watered down. All right. J.P. Morgan's going to save this panic by investing his own money into it, and which stops the stock market from crashing even further. All right. By 1900, you have 7 railroad businesses that control 2/3 of all the railroads in the country. Not a lot of competition there. All right. Now, next topic that we'll talk about are the different empires, and I think this is good here. So you have the railroad, obviously. You know, for example, that gentleman there's Cornelius Vanderbilt, right, which we were also talking about, right? But eventually, you're going to have empires that deal with the cable lines, the telephone, utilities. You know, so you have different businesses, or I guess you could say empires, like the PowerPoint indicates. But you know, people are going to compete over those utilities, whether it's the railroad, the telegraph, the telephone, whatever. Okay. But the first real empire, industrial empire, is steel. Very new technology, again created by Andrew Carnegie. Carnegie, just a little background, he's a poor Scottish immigrant whose father's been put out of business by machinery. So there's a little ironic, gesture here that his family was put out by machinery and by the industrialization, and then he's going to become an industrialist and put others out. But he is a rags to riches story through the Civil War. He creates a vertical integration with Carnegie Steel. And he's the largest producer of steel by 1900, right? And the way he does this is by using the Bessemer converter from Henry Bessemer in England, all right? And we'll look at this tomorrow a little bit. All right. Now his plant is the Homestead, Pennsylvania. It's right outside of Pittsburgh. It's one of the largest plants in the U.S. at the time, and eventually, by the time he's later in life, he decides to sell his company, and he's not really looking anybody in particular to sell it to, but J.P. Morgan is interested, and even though they hated each other, Charles Schwab, who is the investor, he's going to help settle this deal between them. And J.P. Morgan writes down a number and gives it to Carnegie. Carnegie doesn't realize it at the time, but it's going to be huge. It's going to create the first billion-dollar corporation. All right, and so Morgan buys it for like $492 million. All right, it forms U.S. Steel, which is still around today. All right. Carnegie retires and becomes a philanthropist, meaning he donates lots and lots of money to different things. All right. There's good old Morgan. Yeah, but he is the leader in the, like I said, the banking financial section. All right, and he kind of looks over government, and you see him dressed up as Moby Dick there. All right, so once the merger is passed in 1900, you see here he really expands U.S. Steel. All right, and then you see all the different steel plants, the triangles, that he expands it to. Now, oil was discovered in 1869 in Titusville, Pennsylvania. It's the northeast corner. It's near the mountains along 81. All right, John D. Rockefeller begins investing in it during the Civil War. He comes from a wealthy family. And he's a very ruthless businessman. Eventually, by 1900, he's going to control 90% of the oil refinery business or process, and he creates a horizontal integration called Standard Oil. Okay, now because monopolies are illegal by 1900, he forms again a trust, all right, where he acquires other companies and they create a board to control them. Okay, and these boards really control the supply and the prices of everything. Okay, but again, from Standard Oil Trust, you're going to get a whole bunch of other trusts and different businesses. And we've seen this yesterday. And there's John D. Now, his first oil refinery is in Cleveland. Eventually, as soon as oil is discovered in Texas, he's going to move them further to the south. All right, but Standard Oil, we looked at this already, really takes charge of everything. All right, here's just a lot of political cartoons kind of showing you the views of the trusts during this time period. All right. Now, in order to try to allow the small businesses and small farmers to compete and survive, states are going to get involved first with the regulation of trusts. All right. But they can only regulate intrastate commerce, meaning commerce within the state. Right. Because a lot of the trusts go, across the states from one state to the next. The national government gets involved in 1890 by creating the Sherman Antitrust Act, all right, which prohibits the combination or creation of trust contracts or conspiracies. All right, but there are very, very few convictions, and it's too vague of a law. All right, Supreme Court in fact said that it applied to commerce and not manufacturing. And then it's actually used at first to break up the unions. So whereas the unions wanted something like this, it's actually going to kick back and hurt them the most. Now, this is good, really good map. Kind of just shows you all the regions and what they produce. Obviously, you see oils in Texas. You have textiles throughout the South. You have different coal and oil in the Northeast. You have gold out west, other silver out west, things like that.